Just a quick introduction. I've been in information security for the last 20 years, and a couple of years ago I actually took a step out of my security role as a consultant in Accenture, and I joined a startup in the blockchain space because I saw something that was going to change what we're going to be doing, I guess, in the next decade and the decades ahead of us. And I came back to Accenture to deliver a lot of the stuff that I started off to sort of in the startup that I joined. And I've been sort of working on a number of projects and initiatives around the world in this area, mostly in the financial services space, but in other industries as well. And I see something that is actually going to be changing what we're going to be doing in the future going forward. And I also wanted to sort of embed within that how security will transform and how it could also transform security as well. So I put together a series of slides that I talk about with regards to blockchain and the blockchain disruption. A little bit is about sort of background and introduction. I'm not sure how many of you are familiar with this topic, what it is and what it isn't. And also embed sort of the security message around that as well, because it's a very important part of that. So first thing, I just wanted to just quickly introduce what it is, right? What is blockchain, what it isn't. So if you take a look on the left-hand side of the slide, a traditional IT technology, data technology, the stuff that we know and love, is databases, firewalls, it's networks, it's configured in a way, it's somewhat fragmented and replicated back and forth. You have a lot of data in different repositories and so on. We tend to protect it in aggregate, so usually it's a hard shell and a soft center. And that's typically how we build systems. Distributed ledger technology, blockchain technology, I'll talk about the differences in a second, is somewhat different than that, because what we're doing with this technology is we're creating multiple replicas of the same data in different repositories, and we're storing that, and we're replicating the data in real time-ish. It's consistent, it's durable, we share the same information, we mutualize all this information, and we protect the data at the data element level. So what we're doing is we're actually replicating this amongst a number of trusted nodes, and we're protecting it with encryption, cryptography, security at the data element level. There are two basic types of blockchain sort of implementations. If I take a look at sort of all the different use cases that are out there, I could probably summarize them on this one slide. There are sort of implementations or use cases which require messages to be sent back and forth. So we have the first upper left-hand side there. You see sort of messages and tokens being sent back and forth between the sender and the receiver. And that usually implies some sort of a value transfer. So if you take a look at a cryptocurrency like Bitcoin, that's typically what you have. You have a message and you have a token, and the token being money, being sent back and forth between a sender and receiver and recorded on the blockchain as a ledger in the middle. You can also strip out the tokens and just send messages back and forth and use the ledger as a method of recording these messages and sharing this obligation of information. You also have what you see on the lower side, or lower right-hand side of the slide, around mutualization of data. You can use this technology to share and collaborate and use the ledger as a mechanism to exchange information. And there are a lot of applications that have nothing to do with financial services, with nothing to do with money movement, nothing to do with token transfers, that only are using it for reconciliation, for instance, of information, and using it for sharing of information amongst trusted participants. In all of the cases that we've seen, I mean, the projects that we tend to be working with, all of the applications of blockchain tend to be with shared and permissioned systems. So they're basically trusted participants that are part of an ecosystem, and we use the ledger as a way to permission access to different users. There are lots of permissionless systems. Bitcoin and other cryptocurrencies are part of that, but none in the enterprise space that we tend to typically come across. They usually tend to be mostly permission systems. So in this case here, when you talk about sharing and mutualizing information, the parties that you're sharing it with are known upfront before you begin the exchange. So what's all the noise? Why all the excitement? If you take a look at sort of what this can do, this can actually transform IT infrastructure. You can transform the way organizations set up their systems. On the left-hand side, you see sort of, you know, two institutions exchanging information. They have lots of back-end databases, back-end repositories. The data tends to be sort of fragmented, lots of replication, lots of temporary messaging going back and forth. And there's a lot of time wastage behind that. If you're using something like a shared ledger, a shared access model with a blockchain in the middle of it, you're actually sharing this information, you're distributing the information, and it's basically using it in a very durable way. So you don't need to send messages back and forth through a number of different systems. You can just record them instantly on the ledger, and they're basically transmitted in real time. So you can create shared data models behind that. So this creates a lot of different delivery or models behind that. So one of the things that you'll tend to see, we've actually published a paper a couple of months back around the application of distributed ledger technology for reconciliation, back office reconciliation in a lot of different financial institutions. And we surveyed a number of banks, we analyzed a couple of different processes behind the scenes, and we actually tried to quantify the amount of impact this could have regarding those processes. And reconciliation is one of those areas that the implications of this technology is significant. The cost savings to the organizations that we were looking at, we tried to put some numbers behind that were in the billions of dollars, and it was just a handful of organizations that we were looking for. So you can see a significant interest in capital markets, in banking, financial services, where there's a lot of back office functions, a lot of information exchange, and how you can use this technology to do that. So reconciliation is one of those areas where it's a perfect example of how you can use this technology without value transfer, but purely using it in a way that you can exchange information. In this example here, this is a financial services ecosystem. You'll have an exchange in the middle, you have firms on the left, on the right, and buyers and sellers, and so on. And as a transaction takes place, lots of information goes back and forth. In each of those circles, you will create a number of transactions that are recorded and placed in the databases that are there. And as a result, as these transactions are completed, and the process takes a certain amount of time, going from left to right and then right to left, the assets and the money movement follow, you have created lots of different silos of information. The idea behind using this technology for this function is that there are lots of internal reconciliation applications everywhere from trade capture through to operations. Regulatory reporting is a huge area, finance and so on, that you can make this much more efficient. So if you were to create a single ledger, create this ledger, and then everybody has access to this one ledger, you can then record all those transactions, place them within that single ledger, where everybody from the buyer through to the firm can actually see the same information. Everybody sees the same data. You can then encrypt that information according to the access rights. So crypto and security come into the mix, of course. But then you can also give the regulator access to the same information. So what does that do for regulatory reporting? At the end of the day, the regulator has access to this information in real time. No more need for reporting, no more need for sort of extracting information out of systems and so on. There are a lot of applications where this is highly relevant, and there are many use cases where you can apply this technology to do exactly that. So this obviously is a simplified diagram that explains sort of the whole ecosystem, but at the end of the day, there are lots of use cases and projects that are kicking off to implement these kind of solutions in such an ecosystem. Now, clearly, when you sort of see an example, this is, creates a lot. There's a lot of sort of the participation from various participants that is necessary. At the end of the day, the people in the middle, or the organizations that are in the middle, are the ones that are most impacted. And this is why in sort of capital markets and exchanges and so on, they're actually looking at this technology with great interest and with real projects and investing big money behind it to see how they can transform themselves before they're taken out of the equation. Because a lot of these things that are in the middle can be disintermediated if other participants figure out how to implement it and so on. So there's a lot of interest behind actually how to roll these things out. If we go back to the beginning slides that we talked about in terms of the message exchange and the sort of token movement, if I take a look at sort of a typical scenario where I'm selling shares, I can create sort of that transaction. I log into my broker-dealer site, and I can say I want to sell a certain amount of my shares, click the button, and almost instantly that transaction gets fulfilled. But the money takes several days to come. At the end of the day, the whole idea behind implementing the solution is that you can do real-time settlement as well with this kind of implementation. So if I take a look at the sort of the top part of this chart, I can exchange all the messages back and forth, and since I've decoupled the token movement from that transaction, I can then, at an optimal point in time, and optimal is optimal to the business, it's not it depends on what is optimal for you. You can net those transactions, compress the trades, and then trigger the settlement of those transactions in order for that to be completed and doing a sort of a delivery versus payment in the tokenized asset movement. Once you have those tokenized assets, and you have the transaction confirmed from the top, you've completed this whole settlement cycle, and we're talking about some transactions that can be done in real time as well. So we've been working on projects where the settlement time on that is in seconds. So we've taken a weeks of transactions and compressed it into seconds. That transforms everything, actually. So that's the interesting part about this kind of technology, of how you can implement it. So this is just a simple example of how you can do that. I'll talk a little bit more about some of the other use cases in a second, but before I do that, what is the suitability of this technology? I mean, it sounds like a silver bullet that solves all problems. I remember the days of PKI. It was the silver bullet, right, at the end of the day. But there are certain things that it is really good for, and there's certain things that it is not good for. And so when you actually try to qualify what it actually can do and what it can't, there's certain criteria that we actually distilled from a long list down to these 5 key criteria. First of all, are there multiple validation and control points? So if you have multiple actors, multiple validators of those transactions, multiple control points, and the actors as well, external actors, so things like regulators, external parties, or what have you, then it's a great candidate for those kind of applications. Reconciliation. If there's lots of data that is going back and forth, and you have an entire department, a floor of people doing reconciliation, and many banks do, then it's a great candidate as well, because you can take this cost of reconciliation, but even more importantly, the time of doing that and compressing it to something that is significantly smaller. The need for auditability. So this kind of transactions are recorded in an immutable write-only ledger where you have full auditability, or you can audit every single transaction as well as where it originally came from. So the full lineage of the data from the very beginning that that transaction was created, where the account was created, or whatever was created. So you can have full lineage of all of that information right from the start. And you can replay that as well. So you can go back and do simulations and replay and figure all that stuff out right from the very beginning. This means that you don't necessarily have to rely on the integrity of database administrators and security and firewalls and so on. If you have this ledger that everybody writes to and everybody records information into, this can transform a lot of different things. So those are the 5 key criteria. If you take a look at those, sorry, just go back. If you take a look at those 5 key criteria, back doesn't work. Okay. So if you take a look at those 5 key criteria, if it passes the test of this sort of asset test of these 5 key points, then it's usually a good candidate for this. If it passes only a couple of them, then you may want to reconsider. If it passes none of them, then forget it. You're probably better off implementing it with a database or something else. So this is sort of a real good acid test of applicability or suitability of blockchain. There's a lot of different industry examples. Here I just put up a slide that talks about many financial services on the left and many non-financial services use cases. Now, I must admit that this is sort of everything from paper pilots or PowerPoint pilots, so in other words, conceptual ideas that we've implemented on paper, basically, through to POCs. So we've taken those ideas and implemented them with real products and real open source technologies that we've coded and implemented. We've then even taken some of those and put them with customer data, scrubbed customer data and or live data and put it into the system. And some of these are actually in production as well. So this is a mix of everything. If you take a look at this, there's a lot of different interesting sort of things regarding that. A lot of that is sort of financial services, payments related, everything from from transfers, money movement, cross-border FX positions, and private label cryptocurrencies and so on. There's a lot of applications in this technology in that space, and that's where it originally came from. But there's also lots in the trade finance space, because the trade finance space is actually, if you take a look at sort of this ecosystem, it is actually a very, the whole process of trade finance is multi-month, multi-country, multi-jurisdictions, government regulators, customs brokers, banks with letters of credit, agencies that have to sign off on all these things. So it passes the criteria that I talked about before very well. There are also lots of interesting use cases in insurance. Insurance has a lot of equally sort of very involved and very complex process flows. And there are a lot of very good use cases in the insurance space. And capital markets, what I just described about before, especially around the back office function of capital markets, but also in the exchange space. And so we're seeing a lot more interest now with exchanges and market infrastructure of how do you implement this technology and make use of it with real live projects and so on. In the public services, there are lots of other solutions out there, especially around digital notary services, but you can do that with PKI and other things as well. But other areas around refugee tracking, actually tracking sort of the identity of refugees as they enter ports. So you scan their biometrics, capture it, and then you use that in an immutable fashion throughout their entire sort of journey through the sort of the process of filing for refugee status. One application that I find that is, I keep sort of bringing it up, and it's one that's actually created a lot of noise around, is sort of the cryptographic e-voting. We've actually just came back from working with a client where they've actually implemented this for doing shareholder voting. And it's a very interesting application of this technology. It's actually news, it's a press release, it's all public anyway, where we did it with a very large exchange and using it for e-proxy voting or shareholder voting. So it's a very interesting application of this technology because you have full visibility and traceability right down to the voter that can actually verify that where their results were tabulated, how they were tabulated, with full anonymity end to end. So you get full anonymity on one hand, and then you have full ability to verify the results from the end user perspective. So I vote, and I know exactly where my vote went, and I can go and verify those results throughout the whole process, which is actually very, very interesting, creates lots of new sort of areas. And in shareholder voting, it's very specific because you have use cases where there's a lot of overvoting or undervoting behind that. So, and that could be applied in general to other cryptographic e-voting applications in public services as well. Real property, property management, so recording title deeds of properties onto the blockchain. Some governments have sort of bypassed and gone from paper through to blockchain simply because they didn't trust database administrators, actually. The DBA function in government departments in some countries, they weren't really comfortable because the DBA actually, if you have access to the database, you can change the title of a property to somebody else, and then you won't find out about it until much later, and then it's already been sold, and so you have a huge problems on your hands regarding that. So there's a lot of issues regarding property, and even art. So art, where there's a case where they're actually taking art, I'd say a Monet or whatever it is, and you create a tokenized version of this, let's say 1,000 units of a Monet, and I can actually own and sell it and transfer it and move it around and do various things with this technology. So when you start digitizing assets and putting them on the blockchain, you can create a lot of different things regarding this. The missing link, however, actually I'll talk about it in a second, but one of the things that I just want to mention here is sort of what's happening around the world. What are the kind of projects? What are people doing? I can't get into a lot of specifics, but just to give you a perspective of POCs, right? So there's a lot of those around there. A lot of pilots as well. People piloting this technology and putting it in and taking sort of real live data, scrubbing it, running it, and putting it into production. Everything ranges from sort of mostly financial services use cases. There's a lot of interesting cases in resources for doing things like supply chain management, traceability of products from source. You're digging something out of the ground and you're selling it in a high-end consumer luxury goods product, and you want to know where it came from throughout the entire supply chain, every actor that touched it, what did they do? And so I can verify the results as a consumer. I can scan something and I go through an immutable ledger of where it actually originated from and every actor that was involved. The reason why that works is because there's multiple external actors, multiple external interested control points and validators and so on. If it's all within one organization, then you ultimately trust the organization. Where you have multiple actors that are outside, then it's a great use case for this technology. There are lots of other interesting use cases in everything from airplane part manufacturing through to using it for tracking or for sharing and collaborating security vulnerability information amongst different parties. So the messaging example that I gave before, how do I can actually use this within an ecosystem of security participants, let's call it that, and I can share this information in an immutable fashion across this group, and I can also share things like the patches that fix those problems as well in a different way of communicating. And nobody outside can actually see this information. The other aspect to consider is that there are lots of financial services applications, and the production systems that we've been sort of working on and implementing are taking sort of very precise applications, mostly financial services, mostly money movement applications, and transforming them. And the real use case for it is, of course, money and savings and so on, but the real use case for it is speed of execution. So taking transactions that typically settle, and real settlement where you have transaction finality that take typically a couple of days, sometimes even as long as a week, and in some cases even longer than that, and then compressing that to something that is instantaneous, doing that within seconds, where you have transaction finality performed and executed in seconds. That is actually what we're actually implementing. That's what the clients and organizations are trying to do. And I think that is the transformational aspect of it. The technology enables it. The security is critical, even more critical. I'll talk a little bit more about that. Before I do that, I just want to mention a couple of things. First of all, how far are we? Is this stuff, in terms of evolution, I keep putting the slide up, I keep challenging myself about when is this stuff going to really mature. This is an ever-evolving technology. We're in version 1 of some of the platforms. I think there's a lot of bugs to be ironed out. There's a lot of things to learn. Everyone's learning, right? So we're implementing systems. We're scrapping it, starting all over again, and re-implementing it on a new platform. There's a lot of stuff that is still very early days. In 2016, we saw the very first production implementations. So clients coming to us and saying, actually, forget about all this pilot stuff, just put it into production. And I never thought I'd see that in 2016. So I'm very excited that we actually started sort of those kind of engagements. 2017 are the really early adopters. Those are the ones that are going to start implementing the solutions to gain that sort of speed of execution, benefit, commercial advantage, and so on. And then I think over the years will be sort of more around growth. We had one client that actually is interested in implementing it in one aspect of their corridors, basically one of their financial corridors, but they have hundreds of other ones. And so they're starting off small, and then one successful, then they scale it to actually many other corridors behind that. So that's the growth area of it. But I think 2025 is a realistic sort of measure of maturity. And what I mean by maturity in this case is really more around, is this technology as mature as any traditional IT system that you're going to roll out? And is it a viable candidate? And can you compare and contrast it? And is this stuff for real? Between now and then, we'll get lots of other interested parties implementing things and gaining that commercial advantage. And hopefully that compresses, that comes down a little bit quicker. There's huge amounts of investment that's going into this area, and hopefully that maturity date actually comes in a little bit sooner than that. I do want to talk about one thing regarding sort of that transaction finality and the actual final movement of money. We talk about tokenizing assets. With tokenization of assets, we can put things like property on the blockchain, we can put gold bullion on the blockchain, we can put share certificates, dematerialized share certificates on the blockchain. We can do all that stuff. What we cannot do is move real money back and forth to settle the transaction. In order for that to happen, it requires the actual involvement of central banks to start issuing their fiat currency on the blockchain. This is where this slide comes in. This is sort of the tipping point of this technology. I believe there are two key tipping points. The first one, and this is something that is an output of one of the workshops. It was a fairly open workshop with a very well-known, very large G8 sort of central bank. The key thing here is that it was basically came out of what came out of it was sort of two key tipping points. And by tipping point means if you see this happening or about to happen, this is taking off, and you really need to be paying attention to it. The first one is the dark dot there. So is really around the adoption of the first distributed clearing settlement applications in wholesale banking. So actually using it to clear and settle transactions in the wholesale banking environment. And I can say that there are several central banks that are looking at doing exactly that just now, right now, actually. The second key tipping point is the virtualization of a fiat currency. And that's sort of taking whatever currency you have, issuing it and ring fencing it and saying whatever this is, a room full of a certain currency issued by a central bank, ring fencing it and saying that money we're now going to tokenize, put it on the blockchain, and we're going to enable commercial entities and consumers and whoever it is, other banks, to settle those transactions. At that point, not only can I move the assets, but I can also move the money. If I can move the assets and the money, I can then do it in a single atomic transaction. I can do it in real time, and I can transform everything, because that takes everything out of the equation. All the settlement cycles that happen behind the scenes, the 7-day settlement, the 3-day settlement, or whatever it is, will be changed significantly because of that. And that's the key tipping point. And when that happens, that'll be sort of when this takes off. And then finally, ultimately, sort of when central bank money for all, when you can actually have virtualized currency in the hands of consumers, but that's sort of a bit further out. So those are the two key tipping points that we see. I don't think we're that far away from that. Actually, to be honest, I think for the first part, I think we're almost there. And that, I think, is going to be the transformational element of that. When you start seeing these kind of things happening, that'll change everything. What does that mean? It means that market infrastructure players will be disintermediated. FX markets will be disintermediated, because if I'm a bank that has a currency in my position and you're a central bank that's issued your tokens in in another currency, I can buy and sell in real time with no intermediary. We agree a rate, and we sell and we move the money back and forth between one and the other. FX markets, the largest market in the world, $1 trillion industry, it's the biggest industry, will be disrupted because of this. And then market infrastructure players, intermediaries, banking institutions as well. So, a couple of things. I don't want to sort of get into lots of technical detail behind that, but at the end of the day, this technology is all about how do you implement it and roll it out. There's lots of different aspects to this. We've implemented architectures regarding that. I mean, this is just to show you a level of detail that we have regarding the technology, how you actually implement something like this and put it into production. I'm not going to go into lots of the details of this. Just to show that on this slide, you see that information security is part and parcel of this technology and implementation. If there was ever an area where information security is critical, it is absolutely in the whole implementation of blockchain. The risks are an order of magnitude higher, because the key that protects the crypto material is the actual asset. It doesn't give you access to the asset, it is the asset. If you compromise the key, if you generate the keys insecurely, if you do things in terms of from a handling point of view, you have your risk sort of compromising yourself implicitly. So one of the examples I love to give is sort of even things like simple things like as key generation. There have been a lot of attacks. You may have heard about this ages ago around sort of in the Bitcoin space, where wallet technologies were implementing keys. Or the key generation for where funds were being sent into. By poisoning something like a random number generator on a wallet, you can actually generate predictable random keys or generate predictable addresses, where the attacker will have the actual corresponding private key as well. And then when you start sending money into this wallet, then all of a sudden you can extract the funds in real time without anybody knowing. And in fact, if you have the private key, you have the asset anyway, and it's irrefutable. So you cannot even reverse it back. So once you've done things like that, then you create a lot of insecurity around the space, and also it absolutely needs to be secure. Information security is a key part of any implementation. And I believe that it'll be even more critical when we start getting in deploying these kind of solutions. We will end up with having a level of security involvement that will be significant in this. I'll go out of this area. And then just a bit more about sort of, as you can see, lots of stuff in the information security space around PKI, management, encryption, key management, and tokenization, and so on, all around this. So it's quite a lot. It's a very security-rich area, and that's why it's almost like a call to arms to the security profession to actually get involved in this. The reason why I sort of love speaking at events like this is specifically because these decisions about implementation of these solutions are being done in many cases without anybody from the security department. No CISOs, is being done by the business heads of innovation. The business people are actually starting to deploy this. Of course, it may not get deployed, but those conversations need to be happening very early on. And so it's important that you know what's actually happening out in the marketplace and what people are talking about in order for you to get involved in being involved in those conversations. The second aspect of this is actually before that. So two key sort of areas. One is around security, and the other one's around scalability. So the question is really, is this technology scalable? Can it handle the volume of transactions? Can it deal with the scale and the growth rate of required in traditional systems? And that's actually a very good point. There's certain things that it's not really that good for, so you're not going to be putting millions of transactions per second through a system like this because you're recording and creating a ledger and you're distributing it out to a number of people and a number of different nodes and so on. So scalability has to be implemented in a way, or scalability has to be implemented such that it is appropriate for the solution that you're implementing. But scalability is a key requirement, and there's a lot of work that's actually going into testing scalability. So one of the things you may have seen as well, we developed a solution. We took the best of breed of sort of traditional key management and security, and actually combined it with our blockchain implementations, and so it reverts back to good key management, good practices, and implementing it in a proper way. And so what we've done is we integrated this. You may have seen this. We launched this about a couple of months back, and it's a patented solution where we're actually patent pending solution where we're actually taking the blockchain and securing it with hardware security devices, HSMs, and using sort of traditional legacy or traditional technologies that are very secure, that do this stuff extremely well, with technology such as blockchain that allows you to actually manage it in a secure fashion. So we spent a lot of time on this, and we've actually done the implementation, and I believe at least for this part of it, that requirement has been addressed, because we can now make sure that when we're rolling these things out and putting them into production, that they are secure from the very beginning when you're actually generating the keys and storing them as well. And so this is a fundamental part of the solution that we've been implementing with our organizations. I wanted to sort of leave some time for questions, because I think this is a topic that, if introduced the first time, you probably have lots of questions. Every time I attend these, I have lots of questions myself, so I'm learning. Even I've been doing this for a couple of years, and this is probably a good forum to take some of those questions and get you to ask them, basically.